Hi dear friends, how are you all? Welcome to our YouTube channel HR Tutorials India. In this video, we will be discussing about components of salary. Components of salary. Salary components. The salary paid to employees comprises of a number of different components such as basic salary, allowances, perquisites, etc. Any change to the salary structure that is among the elements can have a major impact on what the employee does, such as the kind of tax exemptions claimed. Knowledge of what makes up the salary earned is crucial since it helps to keep the employee informed about how much does into forced savings and what kind of tax exemptions to claim. So, salary components consists of basic salary, allowances, perquisites, etc. And it is very important to know the salary breakup or the salary components to an employee. So, the salary breakup will give a clear picture for the employees to plan his savings and exempt from taxes. Components of salary. Now let us know what are the different components of salary are. CTC, basic salary, standard deduction, allowances, bonus, EPF, ESI, professional tax, medical insurance, income tax, net salary, and gross salary. Let us understand each component of salary in detail. CTC or cost to company. The cost to company or CTC is the total amount that a company spends on you or spends on an employee, directly or indirectly. It includes the basic pay, allowances, provident fund, and others. In simplified terms, this is the amount that the company offers to an employee as a salary package when employing an employee for the job. However, it is not the same as the amount that an employee takes home at the end of each month. In simple words, cost to company or CTC is the total amount which a company spends on an employee directly or indirectly. It is nowhere related to the net salary what an employee gets in hand. The formula for CTC is gross salary plus employer contributions. Then comes basic salary. Basic salary acts as your base income and it is fixed part of your compensation package with the exclusion of benefits and bonuses. The amount of basic salary varies depending upon your designation and industry, but commonly it is set as 40 to 60% of CTC. So basic salary is the fixed salary component of the package offered by the company to an employee. It is exclusion of benefits and bonuses which the company gives to the employee. The percent of basic salary varies from different industries with different designations with different experiences, but most commonly it is in between 40 to 60% of the CTC. During the budget 1920, the finance minister has introduced this new component of salary which is called as standard deduction. Earlier we used to have reimbursement and exemption of travel allowances, conveyance allowances and medical allowances. But here in lieu of medical allowances and conveyance allowances, we have a standard deduction of 50,000 rupees without any submission of bills, which is completely exempted. Professional tax. Professional tax is also called as tax on employment, is a tax levied by various state governments. Professional tax is deducted by the employer and paid to the state government. The maximum amount of professional tax levied is Rs 2,500 per year, and the same is eligible for tax deduction from the salary of employee at the time of filing the tax return. Professional tax is a tax deducted by the employer and paid to the state government for the professional services rendered. Professional tax has different slabs for different states. It varies from 0 to 200 rupees per month. On an average, an employee pays about 2,500 rupees per annum to the professional tax department. Allowances. A monetary benefit provided by the employer to meet the expenditures incurred by you and meet the service requirement is called allowance. They are usually provided in addition to the basic salary. The most common form of allowances is dearness allowance, house rent allowance, leave travel allowance, and conveyance allowance or transport allowance. Again, the amount of these allowances might differ from company to company depending upon the company HR policies. Bonus. A bonus is usually awarded in recognition of the employee's good performance. It is compensation over and above the basic salary. The amount of bonus can either be fixed or variable, and the time period is in which it is due varies different for different companies. Employee Provident Fund, a scheme that benefits an employee after his or her retirement. The Provident Fund is an investment which is made by an employee and the employer every month. This amount is commonly calculated at 12% of the basic salary, which is up to 15,000, and is directly transferred to the PF account. In case it exceeds the given threshold amount, the company may still choose to retain its share up to 12% of Rs 15,000. Employee Provident Fund is the component of salary which is deducted from employee's salary, and the same portion is given by the company or the organization and clubbed together is submitted or paid to the PF department, which helps the employee at the time of retirement. ESI, a scheme that benefits an employee as health insurance. The ESI is an insurance which is paid by an employee and the employer every month. This amount is commonly calculated at 4%, which is a combination of employee and employer of the employee's gross salary, and is applicable only for them whose gross salary is 21,000 or less than 21,000 each month. ESI is a government health insurance policy which is for the employees whose monthly gross salary is 21,000 or below. Medical insurance. The benefit of medical insurance is provided by many companies but not all. A small amount is deducted from the employee's salary each month, which then goes towards their life insurance and health insurance. The premium is deducted from the employee's salary each month. The amount is included in the CTC, but it is deducted from the employee's net salary. Medical insurance is a private insurance policy which is provided by the company, his or her health and life. The premium is deducted from the salary of an employee on a monthly basis and paid to the insurance company for the purpose of life insurance and health insurance. Income tax or TDS. The final contribution made out of your salary is towards the section of income tax and professional tax. The tax amount due on your salary according to the slab and rate of tax applicable is directly divided by the employer before handing over the salary to the employee. This tax is also called as tax deduction at source or TDS. Other than income tax, the professional tax is another form of deduction made from the salary which is already discussed. So, as per the income slabs, the tax is deducted from the salary of an employee. The higher the salary, the higher the deduction percentage. So depending upon the salary and depending upon the savings of an employee, which means depending upon the amount which is tax exempted, the remaining balance will be calculated and accordingly the tax will be deducted from the employee's salary and will be paid to the income tax department by the company. Net salary. Finally, the salary that you take home with you is the net salary. To simplify, this amount is calculated by adding your basic salary and allowances, then deducting the various forms of taxes like income tax, PF and professional tax, giving out the most realistic image of your income. This is the actual amount that is credited into your bank account at the end of every month. Net salary is also called as take-home salary, which gets credited into an employee's bank account after deducting all the components of salary which are applicable like income tax, PF, professional tax, ESI, gratuity, etc. The formula for net salary is basic salary plus allowances minus income tax minus employer's provident fund minus professional tax. Then finally comes the gross salary. Adding the all allowances to the basic salary, you arrive at the gross salary. This amount is calculated before the application of taxes and other deduction. For example, the form for gross salary is basic salary plus other allowances. So guys, hope you have understood all the components of salary like CTC, cost to company, gross salary, net salary, all the deductions and all the benefits given by the company. In the upcoming video, we'll see how to calculate salary and what are the different components where the salary gets deducted, what is CTC, what is gross salary, what is net salary, etc. If you have any queries or questions, please ask in the comment section. I'll be happy to answer all your queries. If you like this video, please subscribe and share among your friends. Thank you very much for watching this video. Have a nice day.